This
Ah,
week's trending topic question is, how do we determine price lows or highs?
yeah,
I'm sure there's a
right.
variety of tools, a variety of answers.
Well, and the scoop is, when it comes to trading directionally, SIP, we want to buy low, sell high, or if we're shorting things, we want to short high and then buy back low. So how do you know when you've got a low? How do you know when you've got a high? What do you how do you do it? When you buy a stock, how do you make sure you're buying it at as low a price as you can?
That's a great question. I believe that my approach is heavily based off of candlestick charts.
Okay.
I'm a big believer in the doji, especially in a downtrend with a doji or an uptrend with a doji. To me, a doji symbolizes that the price tried to move in the opposite direction, but enough buyers came in, but the consensus wasn't followed through, and then maybe applying like a MACD, because I know on the show we always have that cross of the MACD,
Yeah.
which I'm not really sure what it means, but when the two cross, I usually think that that's a good thing, and that's follow through. So that's how I would kind of approach it. And I guess what is your approach? Because you've been doing this a lot longer than I have.
I mean, okay, so pulling it back another layer, if you think about it, there's different ways to look at price action, right? And volume action, I should say. Um, there's fundamentals approach, and so we could look at how a company is doing. That's usually offered during their earnings announcements and any announcements in between their quarterly earnings announcements. So that's fundamentals approach. We could look also at statistics that they keep on companies. Then there's the technicals approach, where we look at actual price and volume and maybe use some indicators. There's pattern approach, where we look at a bunch of bars and see if there's some sort of pattern of investor sentiment. There's a bar approach, where you look at an individual bar. You mentioned a couple of those ways there. First of all, I mean, I like to start with a fundamentals approach, not necessarily to look at um, not necessarily to decide when the top or bottom is happening, but more to come back and say what sort of stocks are going to be, or ETFs, what sort of stocks or ETFs are going to be easiest to understand when they're about to form a top or a bottom. So I personally like to stay away from like penny stocks, because there's a lot of crazy investors who push penny stocks around. They pump and dump. And to be able to pick that out, I mean, I know there's folks out there who can, just eyeball pump and dump situations and jump on the bandwagon. But I've never been good at that, and I've never honed my skills to be good at that. So I first start with a fundamentals approach, just to find those candidates that are high on my predictability scale. Then, I mean, I love your approach, Sip. You were talking about bar patterns, dojis. Other ones that I use are upside down and right side up Lincoln's hats, which are kind of the same thing. So a doji, for those folks that the thing that Sip was talking about, is where you have something like this right here. You have an open price and you have a closed price that are about the same place. And that usually means that the bulls and the bears throughout the day balanced each other out. And then that usually means that, especially if you can see from previous bars that you're at a top, it usually means that that's done and it's ready to reverse back down. And vice versa. If you see that at the bottom, it means start back up. But a Lincoln's hat is kind of the same thing. It's a doji, but it shows this is an upside down Lincoln's hat, and then this is a right side up Lincoln's hat. It basically shows that, for instance, the bears pushed the price down, and then right before the close, the bulls are on their way back up. So I like that kind of doji bar too. And vice versa. For a normal Lincoln's hat, it means that the bulls brought price up in the morning, the bears swatted them back down, and then the next bar you can continue seeing them down like that. So I love bar patterns. I usually use those as like a source of validation. I like using those technicals And don't even get me started on the MACD. The MACD is one of my favorite indicators just because I'm a math nerd. And if you think about what the MACD is basically like a speedometer, right? Like it's velocity of price action. So when you see the MACD, and the MACD is this like blue line here. There are, I guess, if you're getting specific, that's the teal line. When you see the MACD above the zero, that means you've got velocity. And when you see it trending up, it means that you've got some acceleration going on there. And so when you have the MACD kind of either crossing the zero line, which means it's going from being in reverse to being going forward, or even better, we put this moving average in there of the velocity line. And so when we cross that moving average, it means that we're really putting our pedal to the metal there. Um, that's a really good sign that you're seeing a reversal in one direction or the other. And so I love the MACD as my primary indicator, and then using something like a price bar pattern, or even a set of bars like that, like you mentioned, candlesticks. There's all sorts of things like shooting stars, and patterns of the like, engulfing candles that can help us determine whether there's a top or a bottom. I guess my approach is using a little of all the different analyses, and if they all line up, I build up this confidence within me that we found a top or a bottom. Another one that I'm really dabbling in, that haven't quite mastered, but I'd love to master as I get more repetition into it, is actually looking at the volume or the amount of orders. Now that we have NASDAQ level 4 data, we can see limit orders that are being placed. So, for instance, if I think that there is a level of resistance at 4,100, I can actually go look at this NASDAQ level 4 data and see how many limit buy orders are piling up at 4,100. This is called quantitative analysis. And what that means is, as price gets down here to 4,100, there's going to be this rash of buying, which would cause price to bounce back up at a bottom. Same with selling. If I saw a whole bunch of limit sell orders at 4,500, I know that when price approaches 4,500 and all those sell orders start popping, price will be peaking and coming back down because of this self-fulfilling prophecy. So I like to look at that quantitative data now, although I have to be honest, I'm not the best at reading it quite yet.